Okay. Hello, Dr. Guys. Okay, today I'll just go over my chart on GJ, my new discovery on how to trade supply and demand zone on GJ. I use mostly 4 hour time frame to do this analysis, and this is the most simplest strategy I've ever seen. You know, I was trying to mark up something before I woke up one morning, and I started seeing that GJ actually respects 4 hour supply and demand zone very well. So I will go over these entries I made on this trade. Then after showing you, I will show you my thought processes on the trade. So let's begin. I have marked my 4 hour demand and supply zone as you can see them here. You know, the first thing I normally do when you want to mark your supply zone, let me just give you a sketch or just an illustration on how I look for my 4 hour supply and demand. So let's say this is a zone. I will wait for a price where I consider a valid zone is, let's say here, price came up there, rejected, came down, came up here again, rejected, then came down. Now price broke this particular area, then came down there. So this place now is just a zone that will be showing you the activities of buyers and sellers. We know, we say demand is like demand is showing you buying pleasure. When the price of any commodity is low, people will tend to buy. When the price is high, people will tend to sell. So looking at this zone now, we notice that once the price of Indomie comes to, let's say this is 100 naira. Let me type. Let's say this is 100 naira. Let's say this is 100 naira. Okay. Let's say this place, the price here is 100 naira. Anytime the price of Indomie comes to 100 naira, people that have their Indomie will sell. Anytime price comes to 100 naira, people that have their Indomie will sell. Now, there were scarcity, Indomie was scarce, so people were buying Indomie to the extent that even when the price of Indomie touched this 100 naira again, people were still buying Indomie, you know, till this price, you know, so from here they sold. As the price of Indomie came to 100 naira again, they bought. Well, once the price came up here, let's call here 150, 150 naira. Let's call here 150 naira. You know, so let's call here 150, 150. So I just want you to understand the concept. This concept of supply and demand zone, where you mark as your supply and demand zone is where buyers and sellers have something in common. Like at the price of 100 naira, the buyers bought, they bought here, you know. Then at this same price, sellers sold. So that is what I consider as my supply and demand zone. So coming down to chart, I marked this chart up. You know, first of all, I saw a divergence on 1 hour time frame. But let me not go to 1 hour first. Let's just deal with let's deal particularly with supply and demand zone in this session. So if you look at this place, if you look at here, let's begin. If you look at here, price was coming down broke here, came up here, sellers sold. Then market came up again, broke there. Like market was just dancing around, you know, dancing around, came down. Then when market was going up, sellers sold here. You know, there is activities of sellers. One, yeah, activity here too. You know, market broke it. When market was coming down, buyers bought small, then they sold. You know, let's continue. Let's continue. Then here again, see what happened here. Market broke here, came up. When it came up, when buyers pushed the market up, you know, they sold small. Then at this particular area, buyers bought again. You know, here now they bought. Remember what happened and what I explained before, where you have activities of buyers and sellers. Here they sold. Here they sold. Now here now they bought. You know, as market came down again, they bought again. You know, as market came down, came up, they bought again. So we have three zones here. We have, I'll just use this one to explain. In the other examples, I will not give all these explanations. Let me use a circle, label all of them, you know. So I have to pay attention to what I'm doing. This is just the simplest Forex strategy. This is my personal strategy. I just discovered that this is working like fire. You don't need to do much. Just come to the market and mark up your supply and demand zone on 4 hours. So look at here. Let me use box. Look at this zone. Okay, so let me label here. Let me label this. Market sold. Then market sold here too. If you look at it well, market reacted here. Market came up here, went down. Market reacted at this place. This is the reason why I marked that place as a zone. That's what I'm trying to show you guys, you know. So let's look for more. Do we just check for all this? I will tell you the easier way to do it after marking up these zones. So if you look at this place, this is just an overlap. Market respected here too. Buyers bought here. Buyers bought here too. You know. Then we had a final breakout. Market respected this zone. So if you look at this place now, let me delete all this. So here, if you look at, we bought here. Remember the first illustration I gave? We bought here too. We bought here. We sold here. We bought here. We sold here. And we have a lot of reactions that make this place valid. Then we sold here also. So if, for example, you find it hard to identify this on price, you just turn your chart to line chart. If you come to charts up here, when you see candles, some trade view might not see that line chart. The line chart might be hidden. In your trade view, you'll be seeing something like this. You know, you just look for a small arrow. There should be a small arrow around here. Just click beside this candlestick and then favorite, just click this tab to favorite your line chart. So once you favorite it, you just put your chart on line chart. You know, all these places, you won't see all these well on candlestick chart, but at least you can identify this is 1, this is 2, this is 3, this is 4, this is 5, this is 6, this is 7. So this is how you can identify your supply and demand zone. Supply and demand zone for the last time is that particular area that market, the buyers and sellers have a reaction where they have interaction like that particular area on 4-hour time frame. So that's how I mark this place. If you check these ones, let me use this, the second one, and let me give illustration on how I got the second one. You know, the second one, if you look at this place, 1, 2, we sold here, we bought here, we bought here, sold here, we sold here. Like, are you seeing? We have interactions of buyers and sellers at this zone. Then here too, we sold here. Okay, we don't have this when I was marking this. We bought here. Just watch. We bought here. We sold here. So here now we sold. We sold. We bought here. So that's that. I will just stop here. I think we have understand the concept of supply and demand. So let's continue. So how did I now take my entries? Once you mark your supply and demand zones, the next thing you should do is to just leave them and then watch how market is reacting at that zone. So once you have a breakout, for example, you have marked these zones, just leave it. What you should be doing is once market break it, you come down like a sniper with your gun. You check what market is doing. So as market broke here, just go down to, once market breaks your supply or the supply and demand zone, you just wait for market to retest it. Once market retest it, you go down to, you now go down to your 1 hour and 30 minutes time frame. 1 hour or 30 minutes time frame. When you go down to your 1 hour time frame here, let's look at this particular place. This one. Once you go down to 4 hour, your chart will change immediately. So as markets touched this zone, as markets retested your supply zone, you will see this rejection and this engulfing candle. Your entry, this is your entry candles. I will talk about entry candles in this video. This is your entry candle because it engulfed this and it's a bullish candle. And this thing happened around your supply zone. So once you see something like this here, it's always valid. You have 3 entries here. You have 3. Let me check 30 minutes to know whether there is entry on 30 minutes. So on 30 minutes, we don't have so much. It's just the same thing. So on 1 hour time frame, we come down to 1 hour time frame. So 1 hour time frame. Oh, where's my chart? Okay, good. So on 1 hour time frame, just enter your trade. You see how market consolidated around this place. Once you enter your trade, the market psychology, there are something you need to learn about market psychology. Once you enter a trade, nothing concerns you, just leave your stop loss and your take profit to just hit. For example, if you marked up all these things, this is where you should have taken your profit though. This is where you would have taken your profits. The next supply or demand zone, and this is 1:2. So if you put $100 here, you are making $200, you know. So the trader have hit your take profit. So you can just exit the trade, because the most important thing about trading is to get your RR and let the RR just be big enough, So this is the first trade, the first entry on this supply and demand zone. Then we had a break. We had a break of this 4-hour zone. If you look at it, you don't have a retest. It's not your business. Just leave the trade to go its way. Then here we have this trade. We have the break of this 4-hour zone again. I told you that once market retest it, just come down to 1 hour. You're on 1 hour already. This is what we call money star candle. When you have a bearish candle, a hammer candle, and a corresponding bullish candle, that's called a money star candle. It's a very powerful candle. It's a powerful, very powerful entry candle. Like if you use it, catch a lot of entries. The candlesticks that normally gives a very wonderful entries are what hammer candle and morning star and evening star candle. At the end of this video, I will just browse it. You guys will see it. They are very powerful reversal candles. Even people that don't even know how to trade and just looking for where these candles forms. Once this candle forms on 1 hour or 30 minutes, it's a very strong candle. You place your trade and put your stop loss below the hammer candle. And you see this trade, even if you are taking your profit at the next demand or supply zone, the RR is not wonderful. So that is why I will later show you guys why I put down my take profit where I set it. I will later tell you guys. Okay. So here now, this is our next demand and supply zone. Market broke it and market formed what here? This is a very perfect money star candle. And you see, you enter the trade on the corresponding bullish candle. Then market went up immediately. The evening star candle I was talking about, this is the example here. Once they form at the areas of supply and demand zone, they are normally powerful. So let me just use this for just example papers, So this is evening star candlestick pattern. If you enter this trade, if you hold it to just take your take profit at 1:2, it's a wonderful trade. So that is that. Then we broke this 4-hour zone. When we retest, we didn't have a valid retest. Then we broke it again. This one now happened yesterday. There is a valid trade in this 1-hour time frame. This thing happened yesterday. So we broke this 4-hour supply zone again. It gave us second entry, this hammer candle. Just enter. And we hit this negative 61.8. How did I come about this negative 61.8? Negative 61.8 is always regarded as the last take profit level and the reversal zone. So let me show you. If you want to know where market will reverse, that is when you will use that. You can use that negative 61.8. So on this 1-hour time frame, let me show you how I came about that zone there. Okay, just pay attention. All right, so we have a bullish divergence. A structure just ended today on GJ. GJ will sell it. I'm recording this video on 4th of April, 2023. We had this bullish. This is the trend that we are riding on all this while. This market will break this structure and sell. It might sell and remove this lower low here, this swing low here. So we had this bullish divergence. Bullish divergence is when price is making lower low and RSI is making higher high, higher low. This is lower low, lower high. You know, then RSI is making this. So this is where the trend started. You know, this is a very nice entry here for those that trade trend line breakout and retest. Yeah, I'm a trend line breakout and retest trader. You know, this is the first trade for this divergence. You know, just enter the trade. Where this would have been a swing trade. If you had entered the trade here at this zone and put your stop loss below that candle, let me zoom in. Let me zoom in. So if you had entered this trade here, then okay, let me put my fib. So how I drew my fib when the stop happened, I put my fib from point A to point B here. You know. So at first, this market hit negative 61.8. Here, market didn't reverse, so I just brought the fib up to this zone. Do you see? Can you see? So you see at our negative 61.8, market reversed. Go and put this, it's not the number. You see how market reversed at negative 61.8. Like, this is so wonderful. This is so wonderful. So for trend line breakout and retest traders, if you took this trade and swing it to this thing started Friday, March 24th, 2023. Today is April 4th. So this is like 10 days or 12 days. And this is 1,000, right? Okay, this is 700 pips. So if you had entered this trade with one lot size, one standard lot size, you would have just come out with 10,000, 7,000 US dollars. If you entered with 10 lot size, you are coming out with 70,000, right? 70,000 US dollars, which is a lot of money. So it's a beautiful trade. It's a beautiful trade. Okay, before I end the video, let me show you guys how to stick reversal pattern. If you want to search it, just type 16 candlestick every trader must know. You know. So I will tell you, I will show you the most important ones, the most valid ones I have seen so far. This is Bybit. The first one is this hammer candle. This hammer candle is so valid. This hammer candle, it's a nice reversal candle. Whether green or once you see this at the demand zone, just even one of our trade here, we took one trade there because of that hammer candle. Let me show you. Let me delete this. This is a very nice bullish candle. Okay, so let me show you examples of hammer candle. We took one trade based off of bullish hammer. Okay. This is a hammer candle. If you look at it, our first trade here. This is a hammer candle. This is a hammer at 4 hours supply zone, and market made profit. Let me show you another one. This one happened yesterday. This is hammer candle. A market moved up. Can you see? It's a very wonderful hammer candle. So this hammer candle is very valid. It's so valid. It's always valid. Inverse hammer. if reverse hammer happened but I don't normally see. I just want to focus on what I have seen that is what this is engulfing. The next candle is Morningstar Blue. This is Morningstar candle. I'll show you guys this candle before. Morningstar candlestick pattern. We entered one trade here based off of Morningstar. Remember what we saw Morningstar bearish. This is supposed to be a hammer candle. I don't know what this people. Oh no. Let me show you. I don't want to confuse you guys. Morningstar candlestick pattern. Let me show you how Morningstar candle looks like. Yes, this is proper. You know, we entered one trade based off of this Morningstar candlestick pattern, and I will show you. We have Morningstar, Evening Star, and Hammer. They are the strongest. They are the strongest I have seen so far. You know, let me open this. Don't know why this is delayed. Sorry, I had network. Let me. Okay, we had Morningstar candle here. We have two entries with Morningstar. The first one is here. Look at this. I'm sorry, my network is messing up. So this is Morningstar candlestick pattern. This is Morningstar candlestick pattern. It's an entry candlestick pattern. This is Morningstar candlestick pattern here, but it was at the point of nowhere. It's not even too valid. This is hammer candle. This is evening star. I've shown you this before. And then we are having a valid evening star. Okay, this is evening star. No, I don't know what's wrong with my network, so I want to rush the video. So this is evening star candlestick pattern. So this market will sell or it to happen here around here. You know, this is evening star candlestick pattern. So let me check 4-hour time frame to know what that zone is. Whether that place is a zone, whether it's a zone. If it's a zone, then we will take the trade. We take the trade with pride. Oh gosh, what's happening? Okay, nice. Let me check them briefly. Okay, as you can see, this place is a very strong zone. It's a very strong zone that market have respected before. It's a zone. It's a zone. It's a zone. It's a zone. It's a oh wow. So let's mark the zones here now. Let's mark the zones. Seller sold here. Seller sold here. Seller sold here. More seller sold here. This is just an overlap. Then buyer spot here. It came down. It came down. We broke here. Buyer spot here. We broke here. Seller sold here. So this is a wonderful zone for us. Oh wow. It should be a very wonderful ride. We ride it down, brothers and sisters. This will be a very nice trade, a wonderful trade. We ride it. We ride this trade. We open a short very soon. a really nice trade. So guys, I'll be ending this video now. Have a wonderful day ahead. Uh, bye.